Hi, everyone. Thank you for joining us for today's webinar. I'm Olivia Higgins, and I'm the presenter at futusg Singapore, the Moomoo trading app. Now, a little bit about today. This is a joint webinar between SGX, Singapore Exchange, and futusg Singapore, the Moomoo trading app. And ultimately, we are here to help you improve your financial literacy so you can use these webinars as an educational tool to help you in your investing decisions. Now, just a quick one, you can also redeem your welcome bundle worth 280 Singapore dollars, but you'll have to do this by the 28th of February, 0959 Singapore time. Scan the QR code to find out more. Today is a special one because the topic is the dawn of SPACs on SGX. What should investors know? Now, you've probably seen the term SPAC a lot. SPAC, a special purpose acquisition company, has gained a lot of traction recently, especially in the Singapore market. So today we're about to dissect what it's all about and the key trends surrounding this topic. Now, we offer the SPAC listings in September 2021, and there has been a flurry of activity on the Singapore Exchange in the turn of the new year, especially with the debut of blank cheque firms in January 2022 alone. Now, this is also particularly important following the $1 billion new fund announced by the Singapore government to boost listings of high-growth technology startups over here. Now, we are excited to explore the following angles today: introduction to SPACs and its life cycles, how SPACs can inject capital and exposure to the new economy, exploring the trends and growing interest in SPAC listings, primary risks and opportunities in the world of SPACs, especially for retail investors, and understanding the SPAC framework and key considerations. Now, stay till the end because we've got upcoming SGX initiatives and Moomoo tools to help you navigate this space before we go into the exciting part, the Q&A. Now, you may ask some questions at the end of the session. So throughout the webinar, please type in to the Zoom chat, or if you're on your Moomoo app, type in your questions, who you'd like to direct it to, and our team will pick out some key questions at the end of the webinar. So stay tuned till the end if you want to be part of the ongoing discussion. Now, we've got a list of 2 key experts today from SGX and futusg Singapore to help you. And let me start with our first speaker, Pan. Penny is the Associate Director of Equity Capital Markets in SGX with a focus on technology sector and new markets. Now, she is involved in the development of various equity capital market initiatives, including the recent launch of SGX SPAC listing framework and SPAC listings in general. Hi, Penny.
Yeah, hi, Olivia.
Hello. Thank you so much for joining us today. Now, I understand you're about to give a presentation and give your expert analysis on the SPAC listings and also overall outlook. So I would love to give the floor to you. The floor is yours.
Thank you. Let me share my screen first. Okay. Okay. Yeah. Thanks, Olivia, for the introduction, and thanks Futu for organizing this webinar. I'm glad to have the chance to share more about SGX SPACs with all of you. And today, I would like to start by giving a quick introduction of SPAC. So, what is a SPAC? Unlike an operating company that goes public through a traditional IPO, a SPAC does not have any underlying operating business at the time of the listing. So it is typically formed by an experienced and reputable management team known as sponsors who will take the SPAC public through an IPO. The SPAC is listed for the sole purpose to raise the funds from the public investors to acquire or merge within existing private operating companies. And at least 90% of the IPO proceeds will be put into an escrow account to protect the investors' money. After the SPAC is listed, the sponsors will start to search for a proper target and to complete the business acquisition. Then you can see that once the business combination is completed, the SPAC becomes a listed resulting issuer, which carries on the business of the private target operating company that the SPAC has merged with. So this whole process is also called a de-SPAC process. More capital might be needed to complete the business acquisition because the size of the target might be much bigger than the IPO funds raised. So the sponsors also has the job to raise additional fundings. This can come from the existing or new investors in a PIPE transactions, which stands for private investment in public equity. And if the business combination does not take place within the limited time frame, the SPAC will be liquidated and the funds in escrow account will be returned to the investors. So as you can see that from the structure wise, this is quite different from a traditional IPO. Okay, now let's look at a brief timeline of SGX launch of the SPAC listing framework. I think actually SGX firstly launched the SPAC public consultation on SPACs back in 2020. That was more than 10 years ago. But at the time, due to the unfamiliarity of the product by the investors, we think the market is not ready. So back then we decided not to proceed. I think in recent years, we have seen a spree of SPAC listings in the US. So we kind of think it is time, and investors are quite familiar with the mechanism. So in March 2021, last year, we relaunched the public consultation and we received very strong interest from the market. We got more than 80 responses to the public consultation, which is the highest number ever for any of SGX public consultation, which is on average 30 to 40 responses. So the final framework was released in early September, and within 4 months after that, we got 3 SPACs successfully listed on SGX in January 2022. And people might wondering why they want to list the SPACs. Okay, first of all, SPACs has no operations, no financials at the time of listing. Hence, the listing review process focuses more on the sponsor's track record and reputation, which is a very important factor for investors to decide whether they like this SPAC and what they want to invest into it. The IPO process can therefore be completed much more quickly compared to a traditional IPO. And secondly, as you may know that in the US, a SPAC can only start searching for a target company after the SPAC is listed. So they are not be able to engage a potential target or have any kind of conversations before the SPAC IPO. While for a SGX SPAC listing, the asset owners, for example, the PEs, the PCs, the asset management houses, we are allowing them to have the flexibility to identify their portfolio assets as target before they even list a SPAC as a sponsor. I think this is a very key features that different from the US ones, that it offers them an alternative route to exit their own investments. Okay, now let's look at a few more key features of our SPAC listing framework. As I mentioned earlier, SGX focused a lot on the equity of the sponsors, such as the experience and track record during the review process, in order to bring investors high quality SPAC investment opportunity. So in order to ensure the quality of that, we put a requirement on the size. Okay, the size doesn't mean everything, but it is in some extent a safeguard of that, the quality. So apart from the minimum market cap of 150 million Sing dollars, we also require the target's fair value to have a meaningful size of at least 80% of the amount held in the escrow account to be big enough. So when the sponsor going to acquire a target, he cannot just acquire 10 small business combined in order to meet the size requirement. There must be a meaningful business with is sizable enough to be acquired. And also, in order to better align the interests between the sponsors and investors, we also require the sponsors to subscribe to at least 2.5 to 3.5% of the IPO units. Depending, it is a tier structure and it is depending on the market cap of the SPAC. This is something different from the US because in the US, there's no such hard rules on it. And the sponsor's share promote is capped at 20%. Okay, what is a share promote? It is actually the founder shares sponsor get a nominal or no consideration, which they can use it to convert into the shares of the de-SPAC target after the business acquisition is completed. So you can consider it as an incentive. It's a form of incentive for the sponsors to sponsoring a SPAC because they are using their own money to do that. Okay, then these securities, the sponsors shares, including the promote, are subject to a moratorium from the time of the IPO to 6 months after the de-SPAC. And in some of the cases, we even require a further 6 months moratorium on the 50% of their holdings. And one is more, to protect investors' interests, we cap the maximum percentage dilution to shareholding arising from the conversion of a warrant and IPO at 50%. As you know that when the warrants are exercised and be converted to the shares, okay, there'll be more number of shares, so that can cause the dilutions. So we kind of, in order to protect investors' interests, for them to invest earlier at a SPAC listing stage. So we kind of kept that at 50%. And this is also some key features that is not in the US. And also regarding the review process, in order to avoid the regulatory upcharge for the target company to get listed via the de-SPAC compared to the listing via a traditional IPO, we also require the target to meet our main board admission criteria. So you can see that we're standardizing. There won't be a situation whereby the company who is not qualified for our main board listing via a traditional IPO can list via a de-SPAC. This is in order to protect the investors' interest. And for the business combination, you can only proceed if both more than 50% of the independent directors approve for the transaction and more than 50% of the shareholders vote in support for the transactions. So we kind of give the rights to both the IDs in addition to the shareholders to vote for it. And this is also different from the US, whereby they only will require the shareholders to approve for it. And as I mentioned, the business combination needs to take place within a limited time frame. And in Singapore, that time frame is 24 months with an option to extend to up to another 12 months. So if the SPAC fails to achieve that, fails to find a super target, or it keep rejected by the shareholders or IDs, the SPAC will be liquidated and the money will be returned to the shareholders. Okay, I think next I want to go through the SPAC life cycle with you in more details. As a sponsor at the SPAC, at the SPAC IPO, as investors, what you are buying is units of SPAC. So this is a bit different from the traditional IPO as well, because in the traditional IPO, you buy the company share. But here, you buy a unit. And each unit will comprises an ordinary share and a fractional warrant. Okay, what is a fractional warrant? It's not a whole warrant. For example, it's only half of a whole warrant, and depending on the structure of the SPAC at the time of listing. And the board lot size of the units is 100. Okay, and each whole warrant will give you the option to buy one share at a fixed price after the completion of the business combination. And after the SPAC is listed, typically 45 days later, and a date, and I would like to highlight that this date may vary. So please really look out the information in the prospectus to see the correct dates. The units will be split into shares and warrants. Okay, the shares and the combined whole warrants will be traded separately under new counters. That is different from the unit trading. The units will stop trading on a trading. The last day of the units trading day is the trading day before the detachment day. Okay, after that, you are not be able to trade the units anymore. And the detached shares will continue to trade in a bought lot size of 100, while the warrants will trade in the bought lots of 1. Okay, this is quite different. This is quite unique as well. The shares and warrants will be credited to your account 2 days after the detachment day. And at the same day, the units will be delisted. Okay, there's no more units. There will only be shares and warrants. To take note that the remaining fractional warrants that cannot combine as a whole warrants will be discarded. So make your calculation correct to make sure that all your fractional warrants can be grouped into a whole warrants. Okay. Then after that, it is the whole process. Actually, the most of the process is the process whereby the sponsors search for a target. They will go look out for the targets, negotiate the terms, and sourcing for extra money to fund the acquisition if there's a need to. And once all this has been done, the SPAC will call for an EGM, extra general meeting for investors to vote for the acquisition. So before the EGM take place, a circular will be sent to investors with the details of proposed business combination. And it will be issued at least 21 calendar days before the EGM. So this is the period where investors can consider if they want to redeem the shares and exit investment in the SPACs, or they want to go with it. If they want to redeem, they need to submit a redemption form at least 2 business days before the EGM. So this is something I would like to highlight to the retail investors, because I think a lot of people might think that they can make the decisions during the meetings, but actually that is not the case. You have to submit the form actually before that happens. Then another thing I will highlight is that even if you choose to redeem your shares, you will still have your warrants. Okay, you will still hold your warrants regardless of whether you vote for or against the business combination. So this is also a very key features that make the SPAC different from the traditional IPO, because the investor, you will hold the warrants which can be converted into a share in the future, and almost kind of free in a way. Then during the EGM, right? As I mentioned earlier, there will be a vote. So if both more than 50% of ID of the SPAC and more than 50% of the shareholders vote yes for the business combination, the de-SPAC process will commence. And for all those investors elect not to redeem the shares, as well as the PIPE investors, they will be issued shares of the de-SPAC entity. Okay. However, if the vote does not go through, the sponsors has to go back and search for another target before the timeline runs out. And if the business combination is completed and the de-SPAC entities start to trade, normally 30 days after that, investor can start to exercise their warrants. The exercise price, or we call the strike price, will be disclosed in the prospectus, which is very important for you to take note too, because that means that only when the share price goes above the strike price, you are able to exercise your warrants. And to know that the warrant will expire too. Okay, it is normally 5 years after the de-SPAC. But of course, different SPACs may have its own different decisions and different terms. So please really pay attention to the details in the prospectus. I think overall, the trading of the SPAC is more complicated than a normal company share, because it involves units, shares, and warrants, and redemption, exercise rights. Okay, so I would like to remind every investor to look out for the key information I mentioned earlier in the prospectus, and keep the important days such as detachment day, EGM day, redemption day in mind. I know there's a lot of work for the investor to do as well, but it will be on your benefits if you follow that. So that will be my presentation today. If you have any questions, we can discuss during the Q&A session later. Yeah, thank you.
Thank you so much, Penny, for that presentation and your expert insights. Now, personally, I believe there is still so much to learn about the space, but this webinar was a great start to give even myself the tools to navigate the world of specs. Now, again, if you have any other questions for the audience, do type it into the Zoom chat or the Moomoo in-app, and we'll get to it at the end of this webinar. Now, we've heard the analysis, but how exactly can we start? We're about to do a live demo training for you in the app. And this leads me to our last speaker for today, Josh Zhuang, who is the head of institutional sales at Futu Singapore. Now, he believes in leveraging advanced fintech solutions to help investors build long-term sustainable portfolios and seek alpha in an uncertain world. Hi, Josh.
Oh, hi, Olivia. Thanks for having me.
Hi. So as a subject matter expert, we've got Penny, and now we've got you to sort of show them how to navigate the world through tools in Moomoo. So for the audience, if you have your phone or your desktop with you, open your Moomoo app so you can learn together with Josh. So yes, Josh, the floor is yours.
All right, thank you, Olivia. So just let me share my screen here. All right, so you guys are able to see the platform, right? Okay, awesome. Okay, so I think just as shared by Penny that for all the SPAC, if they do the listing, they might have three different things. One is the warrants, one is a share, and of course, so during the subscription period, there'll be another counter of share you can save from this platform. I think in my perspective or in my point of view is the most important thing is before you do the investments, you definitely as an investor, you need to know what the company is doing. So I think for the SPAC itself, as shared by Penny, that's the track record and what's the background of the sponsor is very important. So for most of the time, if I do my own research, the first place I will go is definitely the SGX website. So recently we do have the first SPAC from SGX listing, which is the Vertex. So I mean, if you hear the name of Vertex, I think most of people will say, "Oh, is that the US listing company?" No, actually it's not. But so that's why you found the SGX website. You can see the profile. You can say what the company is doing, what the track record, and what kind of investment they have done. And also, in the meantime, the most important thing is about the listing information. So you can say the market cap, the issue price, all these things. So now, since everything is ready, then another important thing is about the prospectus and also the product highlights here. I think because Vertex is a tech company, so you can say the prospectus is very interesting. It's very comprehensive. You can say what the targets they want to invest, they want to acquire. So you can say all the cyber securities, AI, consumer internet, all these technologies. And the most important thing is about the offering itself. So you can say during the subscription period, you can subscribe at least 1,000 offering units. And these 1,000 offering units, which means after the certain days, you can get 1,000 shares. And in the meantime, you can get the 300 warrants. So for all these things, you can find a moomoooapp here. The first thing is during the subscription period, you can see this counter is called VTA, that is called Vertex SPAC U. So now you can see the trading price is about 513, which is different from the offering price here, because it say the offer price is about 5 SGD, $5 per unit, which means the demand in these markets in SGX drive this price going high all the way to 5.25, and today they trade 5.13. So which means as a retail investors, if you find Vertex, the story is very interesting, you have a confidence in this company, you can straightly buy at this price, you can straightly trade from here. Then you can see the bid price is a 5.07, ask price about 5.13. So which means people in the markets that are willing to sell the units at 5.13. Then once you buy this, there will be certain dates you should take notes. They are here. So you can say the SPAC, the SPAC units VTA, they will start trading on 7 March 2022, which is about 1 to 3 weeks away. And so once they start trading, you will get two different things. The first thing is the SPAC itself, the main counter, which is VT1. You can see the counter now because they're not trading, so you can see the price is still 0. In the meantime, you will get the warrants. The warrants is expired on 2029, 31st of December. That is the warrants you will get. But the warrants itself is another instrument, so you should take notes, because actually here, they specify the price of the exercise price, which is 5.75 per share, which means you do have the right to buy, to redeem the one share at 5.75. Because now the price is 5.13, which is lower than the exercise price. So for now, there's no point to redeem. But if I say the Vertex really find a very good target, a very good company they want to acquire, the price the market will drive, the market demand will drive the price go higher. Then in that case, it will become a send-up bonus, which means because you have confidence in that. And at the end of the day, if they find a very good company, you do have a kind of bonus. So you can exercise and got the warrants start from here. So I think just like Penny mentioned, that once you invest in this, it doesn't mean you can just buy and hold, because most of the time you will receive the news to say what kind of target company they are in the talk with, in negotiating with, or maybe they have interest. And of course, this will bring you to the voting parts. And through the Futu, the Moomoo app, once you are the shareholder, by the time you will receive the notification for you can vote through us. And so then after that is the sponsor information here, what they have done, and actually they list all the information here for your reference. And of course, because this is not investment recommendation, it's just to show you what kind of information you can find on this prospectus. And of course, the team, the senior team, the management team, they're very important. So you can say they can do a proper, due diligence when they find the right company to acquire. And with all this, you can straight away back to the Moomoo app, subscribe during this period. Yeah. And of course, once they do have any news or any information or financial information, you can say, and the Moomoo app will present all the information from here. So I think from retail investors' perspective, the information is the most important thing, because you don't want, if you do have asymmetric information, then for certain things you're not sure, or some certain timing you missed, then definitely you'll be in big trouble. For us, we will present as much as possible, and you're most welcome to subscribe through Moomoo app here. Yeah, back to you, Olivia.
Thank you, Josh, for your insights on this and for showing us how to navigate the Moomoo app so that we can best make better investing decisions. Thank you. Now, I would like to invite both speakers back onto the floor and start our open discussion. All right, so now the first core question I'd like to start with is really, how can the SPAC framework best help tech companies or even the rising unicorns to grow in the Southeast Asian region?
Yeah, I guess it start from me.
Yeah, sure.
Okay, I think we at Singapore, we are very happy to be in the center of the Southeast Asia and being a gateway to ASEAN. Southeast Asia is a key global technology hub. It's home to a vibrant economic ecosystems that has produced unicorn, datacorns, and the next generation global new economic companies. And I think we have seen these companies continue to exploring different funding options. And SPACs actually offers an alternative route for them for capital raising and public listing, including having the investment from the private equities, but without PE dominance. I think because in the old days, when a lot of companies receive investment from PEs, the founders, the control are kind of squeezed out by a lot of PEs, right? Then, but by using listing via this SPAC, they are be able to access public capital, debt capitals without PE dominance. I think that is a very good way to help them to expand further, and for the founders to continue to stay in the company to drive the business bigger. It also, I mean, the SPAC route, it also offers a good certainty on the price, because the whole valuation process is actually negotiated in private discussions when the sponsors go out to talk and negotiate the terms with the SPAC targets. Like getting the price range in the investors' IPO roadshows. So this is something that's quite different in the process. And it's also a greater certainty on execution because there's already a listed share with the money ready so that you can be merged with. And also, as I mentioned earlier, also the SPAC listing itself is listed on the exchange. The process is kind of smoother and simplified because it has no financial, has no operations. So the whole process is considered as a smoother. And also, in addition, it also allows the target companies to partner with the well-known sponsors for network and experience in the industry. Because for sponsors that are able to successfully list a SPAC, they must have a lot of experience and connections in the industries and separate track records. So they are very familiar with the sectors and they will be able to help the target company to grow further as a strategic partners instead of just purely financial investors in a way. Yeah, so from the SGX perspective, we are the first internet exchange in Asia to launch the SPAC listing framework, and we are very proud of that. We will continue to be a front runner in the region by providing viable solutions for these new economic companies to tap to the public markets in new ways.
Yeah, I totally agree with SGX initiative. I think for certain tech companies, so in the first stage or second stage, they still need capital to acquire the markets, especially in Singapore. We're not only talking about Singapore markets, but also the Southeast Asia as a region. If you want to, a certain tech company wants to go overseas, definitely is if you do have enough capital injection, or maybe you partner with a SPAC with a good sponsor, then these will definitely help the technology to expand across the region.
Yeah, I mean, just touching on that, Josh, what do you think? I mean, this came from the audience. What are like some key differences with the framework in Singapore and in other countries, for example? Is there something you'd like to add for this point, Josh?
I think in terms of the framework, definitely SGX is the one designed the whole framework. But I'm pretty sure from exchange perspective is they need to balance, which means the risk and also the return. So from a SGX perspective, they will protect all the retail investors' interests. And I think in the past they don't open this to retail investors, but now I think since the recent initiative, now even retail investors or even myself can invest in certain SPACs. So I think the framework is how they balance the return and risk.
Okay, that leads me to my next question for both of you as well. Why is there then a sudden spike in the interest for the SPAC space, and what are the key drivers for this?
Okay. Josh, you want to go ahead or?
Maybe I can just show some point here, because I think for the reason why is, first of all, I think two different things. One is the tech companies emerging here across the world, not only Singapore, but also in US, in China, in Hong Kong, in European countries. So maybe they all trying to find a way to raise the capital to acquire more market shares. This is one thing. So I think the spike in interest of SPAC will link to this emerging in tech sectors. And this is one reason. The second reason could be the stock market is doing well. I think in US, they introduced this SPAC instrument more than 20 years, but no one really care about the SPAC. But the reason is indeed, out of sudden, you do have a huge amount of injection from the government, from the public. Then these will definitely, the funds will go through the certain instrument, which is SPAC, then to have a chance to invest in certain tech companies.
Penny, would you like to add on to this?
Yes, I just want to say I totally agree with Josh that we also have seen that there's a lot of evolving of the company's business in region, and especially on their business models, because we see that a lot of companies actually are going much faster than before. that the growth can be assessed on a monthly or even quarterly basis instead of yearly only. So this I think in the past the companies never experienced that kind of exposure and expanding before, right? But right now we have seen a lot of new startups. Even after 1, 2, 3 years, they can have a CAGR of more than 100%. That is amazing. And because of this, I think for the traditional IPO, we can see that only the historical financial results can be disclosed in the prospectus. So which means that when investors assessing an investment opportunity, they focus more on the past, okay, on the company's track record. But I think investors are starting to look at the new metrics, for example, future profitabilities, because as I mentioned earlier, these companies are growing very fast. You basically cannot, they are no longer the same maybe a few months later.
Okay.
Yeah, that's right, definitely. So I think it's also because of tech company, the trend here. So as Penny mentioned, you don't have a much track record. Maybe for certain companies, 1 or 2 years, if you see the name Grab or maybe Shopee or these things. So the history is only about 1 or 2 years. But how to prove? I mean, if you want to do a listing, then definitely you need to fulfill certain requirements, the capital, the past financial report, all these things. But for the technology, 1 or 2 years, then the easiest way is definitely using the SPAC. Yeah, it's another alternative way to do the listing.
Yeah, and they are leased via SPAC, right? They can disclose their forecast in the circulars to investors. So a way to prove their future profitabilities, so which the investors will be more interested to look at, right? So
yeah,
SPAC is a good tool for that.
Yeah, I mean, say maybe in the past when you went into the IPO listing, investors say the past, what you have done. But for the SPAC, it's more about you see the futures, what they are going to do. So it's different.
That's a key point. Has the pandemic played a part in the acceleration of the SPAC interest?
And definitely, especially for the new economic companies, a lot of sectors they're actually expanding very fast, including like e-commerce, fintech, consumer tech, hyper securities. Yeah.
Right.
Yeah,
so the overall emergence of the new economy, and that's sort of really just gone into a very good direction, you would say, right?
That's right. So I have to say the pandemic also creates some, I mean, definitely caused a lot of troubles, but in the meantime, it creates some opportunities in terms of investment opportunities. So just like the thing we're using now, the Zoom, all of a sudden everyone using Zoom. So you can say, yeah, so we may say this is a new economy. And of course, the cybersecurity is well, might be the new issue. So that's why you can see the SGX Vertex, they target the certain sectors because no one knows they don't have such sectors in the past, but we can see these sectors, how they can grow, how they can, what kind of opportunities they can bring to us in the futures.
Now, yeah, that's a great point. I think both of you really gave us a good summary and sort of an outlook on what to expect and the potentials. But also, I guess another key question is really about risks, right? So as a retail investor, what are the main risks and opportunities associated with this space? Because we did talk about opportunities, but then what about the flip side of that?
Probably let me touch on the good side first.
Sure.
Especially for the investors, SPACs present opportunities for them to co-invest with very established and experienced sponsors in the industry who are professionals, asset owners, investors themselves. This offers them an opportunity to co-invest, and to tap on their experience to do that. And also, as mentioned earlier, no matter how you vote for the business combination, you still hold the warrant. Okay, so which provides you an additional upside opportunities from the warrants. So if the share price goes above the strike price, you can, while you have already redeemed your shares and get most of your money, you still can convert the warrant into the shares and earn the upside. Yeah, so I think that is a very attractive mechanism for the SPAC investors to incentivize investors who involved in the earlier listings whereby the units still offer you a warrant. Okay, because for most of the pipe investors coming in later, they are normally only offer shares without warrants. Okay. There's also a downside protection of your investment because most of your monies are put into escrow accounts. And so far, all of our three SPACs listed, they all announced that, they all disclosed that they will put 100% of the IPO proceeds raised in escrow account, even though our rules only requires them to put 90%. So I think they are also trying to boost the investors' confidence in investment. And of course, when it involves investment, it definitely will be risk, right? Because no risk, no return. I think the few risks that our investors might be pay attention to, I just would like to mention a few points. The first one is that you are relying on the sponsor's quality and execution track record to identify the targets. There's still a risk that they might not be able to achieve that. They might not be able to achieve a suitable target that can pass the shareholder vote, right? So then if that is the case, the SPAC will be liquidated. Okay, that is the first the risk. And the next one is the dilution risk. Because as I mentioned also, if the target is in a much bigger size, then the money has raised at the IPO, the sponsors will have to find additional fundings by pipe transactions. So the initial SPAC investors' shareholdings might be diluted. Then another dilution, source of dilution is also from the sponsors promote. As they get those like sponsors founder shares at almost no cost, or very, very low cost. When the business combination is done and they are able to convert their founder shares to the these SPAC shares, they can also dilute your shareholdings on that too. So this is the dilution risk that all investors are facing. And the last but not least, I just want to highlight that although you get most of your monies put in escrow account, but you might not. There's no guarantee that you will get 100% back, okay, if something goes wrong, because some of the funds might already be drawn down for the purpose of the de-SPACing process. It has been spent. So what is left over will be returned to you on a pro rata basis, but that might not be 100% anymore. And also, the rules actually allows the funds in the escrow account to invest in short-dated securities with at least A2 rating. It's kind of a safe in a way because it's already rated at A2, right? But there's also a situation whereby if those securities drop in price, drop in values, that means that your money in the escrow account will be diminished. Okay, yeah. I think these are some of the common risks involved in the SPACs that investors should take note.
Very comprehensive. I think those were some primary points that even myself, I've learned some key notes. And Josh, would you like to add anything for this point on risks and opportunities?
I mean, not able to say it's a risk. I think the most important thing is about as a retail investors or as a investors, you need to fully understand the whole framework, the structure. So, for example, when you subscribe this Vertex or subscribe any SPAC listed in SGX, you will get a warrants. When you can exercise the warrants, what's the exercise price, what is strike price, all these things. So it's something you should take notes. And also for the voting parts, and maybe we are talking not only about today, we're talking about because they need to acquire a company within 24 months. So anything can happen within 24 months, and it can be a good company. Or maybe because we are talking about new economy, so maybe the new economy is doing well now, but who knows, within 6 months. So there could be a risk involved in this. So I think the most important thing to me, I want to share with you all is you definitely, before you do an investment, you just need to do your homework and also fully understand the features and the framework of this SPAC. Yeah.
Okay, so I really appreciate and I loved all that you shared, both of you, with our audience. And now it's my favorite part of the webinar, the Q&A from our audience, and our team has gathered the top questions for you guys. So I think I'm just going to jump straight in. So the first question, someone has asked, linking back to the last question on risk and opportunities, they would like to know some examples of high profile SPACs that have been successful. And I'm just going to contextualize this to the Singaporean context. Perhaps Penny, would you like to answer this question?
Okay, I think if you take a look at the 3 SPACs that are being listed on the SGX, notice that it is a very good mix of the sponsors with Temasek-backed background, and also the international ones from the Pegasus. It is a very big 40 billion euro dollars asset management houses together with the shareholders of LVMH and Christian Dior to decide to launch a SPAC here. So we kind of think the first batch of SPAC listings is considered to be quite okay, and with really good, reputable, established sponsors.
Okay. Josh, would you like to add anything to that?
Yeah, I agree, because I think for the SGX itself is trying to put the right direction, especially in terms of the listing parts, and also for the profile itself, they will cover different sectors, different industry, and also different regions. So I think for the profile itself is quite diversified, and yeah. So.
Okay. Next question. I think this is. It has been in the news as well for the Singaporean context. It's really about long-term opportunity, right? So the next question from our audience is, what do you have to say about SPACs just being a hype, and is it here for the long term?
I think just now we kind of explained why there was sudden a spray of companies, or a lot of more companies want to list via SPAC here. I think that is because of the business model is keep evolving, and the need for them to demonstrate to investors their future profitabilities instead of just focusing on their track records. I think that is from the company's perspective. But of course, for the sponsors, they are also kind of motivated to do the SPACs here, because for the first reason, the process is simpler, it's quicker, there's a price and execution certainty, and also it will link back to the share promote, right? Because that's kind of a big chunk for them to be incentivized to get the business combination done, because only after that they can convert them to the shares of the resulting issuers and to get their returns back. So I think if you put all this together, you can see that the SPAC is a product that can align the interests of companies, the sponsor, investors well. So that is why people in the market, they are willing to do it together.
In my point of view, it will definitely not short-term things, because there are always new concepts bring to the markets. I think in November, 2021 November, no one knows about one concept called metaverse, but now everyone is talking about metaverse. So this will be the new concept here, and this will, still in the markets. I'm sure maybe in 2022 this year November there will be another concept new concept to the markets. Then of course, so for all these things, if you're talking metaverse, the track records, how long you can say 3-4 months, then definitely if you do have a certain companies, they are quite specialized in these sectors, SPAC is one of the best way for them to do the listing and for them to acquire the market share. Then this company itself is more than willing to work with all these SPAC sponsors and to get more market and to grow together. So I have to say it's not short term, because they're always a new concept to the markets.
So does this extend beyond just the tech space? I understand there is a focus with the tech space, but would you say it would, depending on what the next trend is, it would extend to other sectors, for example, real estate?
I think for the real estates, because the AUM requirement is pretty high, and also they have a well track record, all these things. So I may say in terms of sectors, it's still tech or the new concept, new economy is still the main driven for the SPAC these instruments. Yeah.
Okay. So our next question. for both of you. So what are your thoughts and analysis on what happened with the Grab SPAC after the world's biggest SPAC deal?
Well, I think it's unfortunate the market cap dropped significantly post. I think there were a lot of reasons, which I think maybe we can see how the companies explain themselves.
I think it's still about the market. You know, the market will value the company itself is based on the performance. So yeah, of course, we're talking about tech companies. We're talking about all these things for the past 1 hour. But at the end of the day, still the market will value a company based on they do have a valuation based on the sector, based on the past record, based on the financial performance. That's true. So I think just like Penny mentioned, the company need to give the reason to the market why, you know, the market didn't provide the so-called, I mean, not able to see the fire value, but why the value dropped. Yeah, so I think, so that's why I think the sponsorship is also very important, because you can see if they are the expert in certain sectors, I see the cyber securities, or you see AI, they do have you know, so many years experience in these sectors. These will definitely help the investor to pick the good companies, acquire the good companies.
I think it will ties to the investors' expectation as well. Because no matter how you are describing yourself, you are so good in the future in 2, 3 years or 10 years, you will have to show the investors that expectation is kind of met in some extent. Important.
Right. I mean, that's a good point. I also think, you know, when people look at the DNA of, for example, Grab and all that, they've got their own expectations. And so from, you know, from my side, just a person who might have invested in the space or looking for future opportunities, what sort of sentiment are they supposed to have going forward in 2022? I mean, it could be specific to the Grab case or just tech companies in general in the Singapore market.
I may start first, because I have to say for the past, in 2020, 2021, when we're talking about SGX, to be honest, the IPO, I think there are only 6 or 7 IPO for the whole year. So, but you can see now it's only the second month for the 2022. We have 3 different spikes. We have more, you know, IPO listing companies is coming. We have IOP, the ETF IOP as well. So I think for the 2022 will be very exciting years, especially to SGX in Singapore markets. Yeah. And also with the so-called macro environment is after the pandemic, or the economy is going to recover. So I think especially for the investor itself, it's not only Singapore investors, but also the regional investors, for offshore investors, they will focus, I mean, they will pay attention to, or they will show the interest to SGX, or especially the Singapore markets. It will be a very good way to access the region.
Okay, this question is for Josh. What are the unique product features of SPAC?
I think as shared by Penny, that the product features is that if you subscribe now, you will get a share, you will get the warrants, and you will get even the warrants, which means you will get the strike price, exercise price. So it's so different from you do the IPO or IOP, which means if you do IPO, you will subscribe 1,000 shares, you got 1,000 shares of this company itself. But for this SPAC, on top of the share itself, you got the warrants as well. So the features or the framework are different.
Okay. And just to wrap up with our last question for today, particularly following the $1 billion new fund announced by the Singapore government, I think I touched a bit on the background earlier in the webinar, but late last year, they announced this to boost listings of high growth tech startups. And so, you know, for both of you, what can we expect about the Singapore stock market in the year ahead? I understand it's quite exciting times.
I think certainly we cannot forecast.
Of course not. So I guess
but we are quite confident. There will be a strong recovery from COVID, as you can see. A lot of countries from the west to the east, they start to open the borders, and the international trade flows going back. The shipping industry has been recovered quite a lot already, and we do expect that the business will gradually recover back to normal. and that will create a lot of potential opportunities for companies to keep growing at a faster pace than the past few years. And of course, when they grow, they will need money, and that's when capital markets can come in and we as an exchange. We will continue to provide that kind of solutions to help the company to raise funds and spend in the regions. And that will be our key priorities to do, and we are quite positive for our pipelines going forward.
Josh?
Of course, from the broker's perspective, we may not able to say, do a forecast to say this year we're definitely going up or going down. But from our standing here, we are quite optimal about the economy of this year. I mean, it's not only about the stock markets, but also the whole economy of Singapore, or you can say as across a region. So definitely, you can see more and more investors showing the interest in terms of SPAC, in terms of IPO, all these things. So because they know they need the funds, they need the capital to expand the business. That's why we can tell. I mean, at the end of the day, we can still tell everyone, say we are quite optimal about the economy of this year. Yeah.
Well, a last question came in, and I'm bringing this up because I think it's quite important for myself as well. For Penny, what are just some resources or initiatives does SGX have to help investors?
Yeah, of course. I think together we've launched our SPAC listing framework. I think we understand that the key component of the whole ecosystem building is investor education, especially for our sales. So we know it's important, and as part of our overall effort in it, we have provided various of ways for investors to understand the SPACs better. Okay, I think first of all, we have actually launched a SPAC product page on our main website, sgx.com. So this page covers most of the key information, such as the SPAC structure, framework, life cycle, trading information, and all of that for investors to learn more about it. So you can make a reference to that before your investment. And also, we are also in process of a launch, including SPAC introduction videos and infographics for investors to understand the key features and timeline in an easier way, and with more graphics and more illustrative ways. And also, we are running a series of webinars focusing on SPACs periodically by our SGX Academy platform. It's open to public and it is free. So we really welcome everyone to sign up for it and to join our speakers. And also, we are partnering with our market participants like futusg to talk about SPACs and to answer your questions and discuss SPACs with you directly. That we're also engaging financial influencers to publish some articles on SPACs to help the investor to understand what is happening in the market right now. And speaking of which, we partner with Dollars and Cents is going to publish an article today on the 8 things you need to know before investing a SPAC listing on Singapore Exchange. Watch out, stay tuned for that. And overall, as you can see that we've been in exchange, we have put a lot of efforts in helping our investors to understand the SPACs better.
Excellent. Any final thoughts on today?
I mean, from my side, from broker's perspective, is we're still quite optimal about the whole thing. Especially, we're quite excited about the SPAC, the instruments introduced by SGX, and of course, from the brokers, we will do our very best to provide more courses. So just like Penny mentioned, we have more educational materials, tutorials, all these things. We just want to ensure that all the investors understand the features of each instrument.
For exchange, we are very happy to be here today and to work with Futu to provide more education on SPACs to our investors and to encourage them to trade. I think we want to continue on that, continue our efforts in it.
Thank you. Thank you so much, Penny from SGX and Josh from Futu Singapore, for joining us today and offering your insights and expert analysis on SPACs. As for the audience, it was a pleasure being with you, and thank you so much for the great questions. But before you go, you can redeem your welcome bundle worth 280 Singapore dollars, but you'll have to do so by 20th of February. Remember, it's 0959 Singapore time. You can scan the QR code for more details. Now, if you enjoyed this, you can also follow our Instagram, YouTube, and other social channels for not just updates, but for more educational tools and videos to help you further in this investing world, in this investing space. Now, our team has also put any details in the respective chats if you want to reach out to us. And also, what would you like to see next for the webinars and some content or questions that you have for us? Now, after this webinar, if you still have any questions, do email us at webinar@futusg.com. That's webinar@futusg.com. Thank you for joining us today. Once again, I'm Olivia Higgins. Have a wonderful day ahead and see you next time. Bye.
Yeah, thank you, Olivia.
Thank you. Thank you.
Pleasure.